Oh, thank you for watching this video. In this video, I'm going to talk about how in and out of inventory works in QuickBooks Online financials. So the impact of you buying and selling inventory, how those transactions show up in your financials, like income statement and balance sheet and what happens on cash basis, what happens on accrual basis. Okay, so that's the focus of this video. So now I'm going to go to QuickBooks Online, and I'm just going to go over some examples. Okay, let's go to QuickBooks Online. Okay, so this one is basically one inventory item, new one. I just did this for this demo. So in this case, is basically I started one new SKU, new part number for inventory. It's a 10-pound dumbbell, and then I started buying from the same supplier three times. If you have watched my previous videos, you'll understand why I uh, bought it three times, rather than just one, So there are specific reasons why I did that. So if you go back, you will know. So anyway, and on this one, it's very important that you bought it on bill, like vendor payable or paid cash. In this case, expense transaction type is expense. That means you paid by check or credit card or bank transfer, whatever. So in this case, it's expense. So it did hit your cash flow right away. So if you have, uh, say, you created transaction type as bill, then it's basically just setting up at the accounts payable. You haven't paid that bill, and there's no cash flow at that point. And then you created invoice. So invoice means the customer owes you that money, so you haven't received the cash yet. And then last two, the credit memo and the inventory adjustment is basically the customer just wanted to return one unit, and then lucky the vendor said, okay, just send it back to us. Then that's what it is. So in and out type. Basically, it's a transfer from your customer to your vendor. Okay, so now I'll go back to the. Uh, let's start with the P&L. Okay, so this is kind of important for the bookkeepers, to understand how everything works in QuickBooks for the inventory items, or even small business one if they want to know how it impacts your financials. Okay, so I'm just going to do profit and loss report now. Okay, so this is the profit and loss report. I just did it for the last couple of days. Okay, uh, so this is on the sales. Is basically this is on. Let's just run the cash first. Okay, when you run the cash, you don't see any income in here. The reason is it was invoice, so they haven't paid your bill. The moment they pay your bills, then it will show up on cash basis. So on accrual, you will see uh, this income in here. This is the one 2640, right? And but you don't see it when when it switch to cash, because it's invoice, they haven't paid it. On the other hand, uh, when you bought it from your vendor, you paid cash. It's not exactly cash, but let's say checks or something. So that's why it's in here. Okay, so you paid cash. That's why it's in your P&L as your expense on cash basis. And let's look at the accrual one. So accrual one is basically you have both. This is your cost of goods. So in order to run the find out what exactly I'm making on this inventory items, you really need to run the accrual basis report rather than just the cash, because the cash could be, so you don't show up your gross margin because it could be invoiced, or vendor accounts payable, or your sales could be sales receipt paid in cash. It could be anything. So if you run the accrual, then you get a true picture. Okay. So as you can see here, this is first month. Well, I don't have any transaction in this demo account. So it's basically 2615 is your income, and then you have cost of goods sold, and the shipping cost, and then the gross margin. So 705. So if you calculate the percentage, you'll see how much gross profit margin you have from this sales. Okay. So now I'm gonna go to uh, the balance sheet. How will show up on your balance sheet. I'm just going to balance sheet now. Okay, so here's the balance sheet. I got a big long balance sheet here. This is a demo account. Okay, so I'm just gonna, okay, so whenever you buy things, let's just do the cash first. So whenever you buy inventory, it goes to this inventory asset account. So this is QuickBooks Online default account. Normally, you shouldn't see anything, when you buy it on cash basis. So the inventory assets should be zero, in fact. So this one is this is demo account. I've been playing around with this thing, making so many transactions. So normally inventory asset account, it should be zero until you have some transactions. So if the accrual one, you'll see it. Okay. So if you're confused a little bit, the three accounts, it should be zero on cash basis. Like accounts receivable should be. This is like you see the difference in here. See the accounts receivable, and then you have some other accounts receivable, accounts payable, and inventory asset account. Okay. So now on accrual basis, I know this is kind of confusing. So it's basically I started out with this, and then I added the inventory. This is on accrual basis. So as I said, you have to run the accrual basis, and on the cash basis, it will always distort your report for the inventory asset account. So it's basically, it's bad. Basically added the inventory, and then you sold it. Then you'll see the cost of goods sold, and so this is how it impacts on your balance sheet. I know this is you have so big. If it's just that same transaction, then you won't see it. So you have to see the difference in here from 443 to 452, and then went down to 450 because you sold it. That's why. Okay, so that's the focus of this video. Hope you like this video. It's kind of confusing, but that's the way it goes. Okay, so. Uh, on my next video, I will talk about some of the things like so. I think from part 1 through part 9, I covered almost everything. So on part 10, basically I will go through what I covered, and then you can ask questions if you have any questions on this one. You can just write a comment on your YouTube video. So anyway, thanks for watching this video, and hope you like it. Thank you. Bye.